You've had a Fed chairman who's clearly misspoken, which has caused the market some concern. You still have global growth declining, not increasing.
And quantitative tightening. So let me put some of those at ease.
But that's real. But that's not a headline.
We've not built the wall that Trump has wanted. We've built another wall, which is the wall of worry that we are absolutely going to climb. Maybe Fed Chairman Powell didn't say things as elegantly as he would have liked, but think about this. Fed futures are indicating that there's not going to be a tightening next year. The dots are saying 2 tightenings next year.
And on this show yesterday, Scott Minerd said there's a 50% chance of a rate cut.
Okay, so that leaves incredible latitude to deal with what happens prospectively. But I guarantee you, though, Steve, I guarantee you that when he speaks on the 4th, that he is going to be much more careful with his words. Yes, there's no question that the market was scared, but that doesn't invalidate.
Let's talk why the market's scared. The market's scared because, and I read your notes, contrary to what you put in there, CEOs have retrenched. GDP numbers show that. CapEx numbers show that. So there's clearly
What's the most important?
Let me finish. So there are clearly factors going on in the market that indicate a slowing. That's not headline. That's fact. As I mentioned, the global economy continues to slow. We're not in an easing cycle anymore anywhere. We're in a tightening cycle until, Scott Minerd's words may become fact. Right now, they're somewhat of 50-50 prophecy. So I still think that there are real worries. Now, the issue is, here's where we are. We're down 20% roughly in the market. A lot of stocks have been crushed more. Are there opportunities here if you take that longer term time frame? And I believe that there are. So I put a little money to work. I'm sitting still. I say 95% cash, but I have a huge weighting in Treasury bills, short duration.
Let's let Rob respond.
So when you think about that, all these things that are on our dashboard that are flashing red, what's going to make you continue to drive down the road when some of those start not flashing red anymore? And I think that's what's going to cause people to get re-engaged.
Are you willing to bet on?
No. Let him respond. Let him respond.
May I respond? I'll give you data, too.
Go ahead.
Anytime the VIX is above 28, and you have federal loan officer surveys indicating that credit is still loose, credit is the lifeblood of the economy, and anytime that it's still loose, you've always had a positive market in the prospective 12 months. Okay, going forward, always. There's never been a case where it hasn't. Okay, so you tell me that when stocks are trading at 14.2 times, all the fundamentalists which have been absent from this market, period, the end, they're on vacation. The algos are running everything right now. Tax loss selling is running everything right now. And when they return to work,
let me ask you this question.
But hold on. When they return to work,
we're going to leave an hour show.
They're going to put money to work, and they are going to buy risk assets that look relatively attractive.